It's Thursday, February 4th. This is The Street Live. I'm Catherine Ross, and I am joined, as always, by Jim Cramer. Jim, instead of just asking about the general markets, I know that there are stories and tickers that you want to pay attention to. So for our viewers, I want to just go ahead and break down these stories. And I want to start with Barstool Sports and Penn National. Why is this a stock that you're eyeing right now?
Well, I remember the deal that David Portnoy from Barstool, what reach he has, did with Penn National. I thought it was just a tour de force for both companies. Why? Because Penn National needed to be able to have a book. They needed to be able to get known. They needed to become more of a national footprint. And so they turned to David for a customer acquisition, and it turned out to be a brilliant strategy. I've been behind this stock. I know it was in the 20s, and when it went to the single digits, I said, please, please, please buy it. They are doing some things in gaming that no one else is doing, which is they're making it so that it's approachable to all. There are two revolutions going on right now. There's the Merriman Revolution and there's the gaming revolution. And I've got to salute Jay Snowden for affiliating himself with an outfit that I think is pretty much consistent with the new age notion of Smash Mouth. And it's a personality. Dave is a personality. Yes, he's been to Longshoreman, my currently mothballed restaurant. Yes, I've gone to an Eagles game with him. I always am conscious of the fact that he's controversial. I'm also conscious of the fact that he doesn't want anyone saying, oh my God, the guy's using me in order to get page views. So I've said my piece, Penn National, good stock.
Okay, then let's look at Clorox because Clorox is down about 4% to 195 a share today.
How do you top yourself when you are probably the premier vehicle to be able to clean your house? You're not going to be able to top it with just Kingsford's or salad dressing. Clorox is a remarkable company. The margins are amazing, but you know how Wall Street is. It's fickle. When you can't maintain that kind of growth, people are just going to sell and find other things. Sells at 22 times earnings, excellent numbers, a new CEO, Rendell's terrific. I'll have her on Mad Money tonight. But it's not the stock that people want right now, Catherine, because people want to be able to buy a stock. They want to call it, they want a jab stock. That's what I'm calling them now, jab stocks, because I just kind of like that. That Clorox is not a jab stock. Clorox is a stay-at-home stock, and that's the problem.
So then, Jim, I have to ask, can Kohl's come back from the grave if we're looking at it in a jab stock kind of sense?
Michelle Goss, she's done a very good job. Now, I think what people have to recognize here with Michelle is that there's a moment in time where she did not deliver the numbers, and I was harsh. And when you don't deliver numbers, I'm a different person from when you do. But this was a down, you're talking about I know when you say somebody's down 10, 11, it doesn't sound so good. But those numbers were better than expected. She's done very, very good on e-commerce in a very short period of time. And what I happen to like best is that they grabbed that Sephora deal. Sephora is a fantastic come on. Sephora has done so well for JCPenney. Obviously, Penny did not follow up, but it's on its own right. So I salute her. I also salute, by the way, Matthew Boss, the great JP Morgan analyst who recognized that L Brands, I don't know, just gads of points ago, was going to be able to do the right thing. They are going to explore options for Victoria's Secret. Bath and Body Works turned out to be a terrific division. And so you've got L Brands and Kohl's, both mall-based stores, or no, Kohl's is more against strip mall, doing well today. Those are stories about post-jab, people going back. Good stories. Now, Kohl's, I missed the bottom. Can't catch them all. I think, too circumspect because the miss was so unbelievably in my face. But you know what? Good for her.
So then, Jim, sticking on the retail kind of train here, let's talk about Ralph Lauren.
Well, look, I mean, Ralph, this is Patrice Louvet, and when I go over the notes this morning, I like to stay close to that company. Why? Because I think it's just a classic, great brand name, and I like what they've done. Now, I mean, people are going to sell the stock. Why? Because they'll look at the numbers and say they don't understand. It looks like that they're not doing it well. Well, it's a company that's very much in transition, and when I look at a company that's transition, they did have some stores closing malls. That's only 15% mall base, 1.5. And I see about what they're doing in Asia, and I see that they have a deal with Snapchat. Makes me want to buy Snap, most definitely, where 500 million people dressing themselves on a Snap platform and 550 million people. That's rather extraordinary. They're going to reinstate the quarterly dividend. The direct-to-consumer switch is happening very fast for them. And I just think that what you want to do is you periodically want to look at these companies that are reinventing themselves. And Patrice Louvet is reinventing that one on the fly. We know that that's a fantastic brand name. So think about this. L Brands, there's a defunct brand's come back. Kohl's making a comeback. Ralph Lauren making a comeback. Upgrade today for Best Buy at Bank of America saying that they're going to be an opening store. Today, the theme is reopening. And I like that theme. I like it a lot.
So taking a pause from the reopening theme, let's look at two stocks that have been very heavily talked about in the market, and that of course is GameStop versus Bed Bath & Beyond. Why do you say versus here? Because this is your wording.
Well, GameStop is a company that obviously is still very much in the news, and the people who own GameStop, I think at this point need to see it reinvent somehow. Remember, it was the 50s and 60s when the stock was in its heyday, which was it was a great way to get physical games. It's no longer. Bed Bath is run by a man named Mark Tritton, and he was a fantastic merchandiser for Target. He's reinventing that company. A lot of people felt that that company is pretty much dead in the water. There was, again, one of those gigantic short positions. We're not sure, but it looked like it was 67% short. And that was just wrong. I mean, because the balance sheet's good, they're spewing cash, they've got a lot of things they can do. So when you look at a Bed Bath, you can go to a Bed Bath, and you see new merchandising, you see some things that are exciting. I don't go to GameStop. Look, I want GameStop to go. I want everybody to make money, okay? But I do think that Bed Bath got caught up in this whole revolution, and maybe what you have to do is say there's a level where you want to get back in it. It's a stock that I liked at 16, 15, 14, 13 when John Duskin, an old friend of mine, came in and kind of changed the board there. And I'm not going to say buy it up here because it's up because of the short squeeze, but I do think that when we're looking at these fallen angel retailers that can make a comeback, we have to include Bed Bath in it. We don't necessarily know yet whether we should include GME.
So before I move on to our next question, Jim, I do want to quickly bring up Qualcomm. I mean, it's down 10% to 145 a share this morning. What did you make of this earnings report?
Well, I mean, Steve Mollenkopf's last, and I respect Steve a great deal. But the call was filled with shortage, and they can't meet demand. And it's bringing down the whole cohort. They have some issues. There is, when you have too much demand at a certain point, you're not going to make as much money. The stock is really being shelled. At a certain point, obviously, I think you just have to get in it. A lot of times when you see stocks go down like this, what happens is the analyst tomorrow will downgrade it. Oftentimes the best time to buy. But I think Qualcomm is going to stand the test of time. It's intriguing to me. We own Broadcom for action alerts, and that's been terrific. We own Marvell. They're both better than Qualcomm. AMD
okay, so Jim, AMD is better too. Okay, so Jim,
and
last
NVIDIA,
time
I'm going to put NVIDIA in the same, NVIDIA is just another world. It's so great.
So last night on Mad Money, Jim, you broke down the 7 tenets for new investors, which was really fascinating to me. But there's one in particular that I really want to focus on. And
Sure.
that's because I'm seeing a lot of speculation around it. And that is your tenet number 4, which is that Treasury Secretary Janet Yellen is meeting with regulators concerning the move in GameStop. But her focus truly is the economy. So how can these new investors separate the economy from the stock market?
Well, I mean, Secretary Yellen is doing her best to be able to manage what is a situation we can't ever forget, which is that there are a lot of people who are out of work, a lot of people who need stimulus checks that we're not, we could have a super spreader event this weekend with the Super Bowl. So we have to be conscious of the fact that she is trying to get as many people back to work as possible. What we need is transparency. When we talk about transparency, we have to distinguish a couple of things. Commission-free trading and a good app brought a lot of people in via Robinhood. Okay, so is commission-free in reality, or is there a tax that was put on, a hidden tax, perhaps because of a payment for order flow? Is it right to have a situation where you can't access your capital and can't trade? And how do we keep that from happening again? She's doing that because she's a very hands-on person who is trying to inspire trust in markets that need trust. I think she'll do a very good job. Again, though, remember, caveat emptor, stocks are risky things. Do not count on Janet Yellen to give you a warranty. It ain't going to happen.
So we just can't escape earnings. And this morning, your mad dash was PayPal. They did post a strong quarter with revenue surging. What stood out to you in general in this quarter? Because I know you have owned this stock in the past.
Sure. I mean, we're very close to Dan Schulman. He's always been made great access to us, the CEO. What stands out is that this is now, thank you, Lisa Ellis from Moffett Nathan's for this, is this really is very much a consumer company now, consumer facing. It used to be kind of behind the scenes a little more. There is tremendous total payment volume growth here, far more than I ever thought. The number of the account openings are extraordinary. This happened to be exactly when you're supposed to be worried about PayPal faltering because they had separated from eBay. Well, it was eBay that had to be worried about separating from PayPal. eBay did have a good quarter, but Dan Schulman is doing some things that even make me say, wait a second, crypto. Does he have the best crypto solution? He addresses crypto in a positive way on the conference call. Does he have the best buy now, pay later, buy and pay later strategy? But we're talking about a firm here. I'm looking at some of my notes, and I think that the answer is that his Affirm like offering may be absolutely better. Total payment volume up 36%. So when I hear crypto, when I hear average revenue per user is going up $70 now, I say to myself, well, PayPal is above the fray. In yesterday's ActionAlertsPlus.com conference call, I talked about the need to get back into PayPal, that we had left it, but it's a changed company. And sometimes you can't hit them all. I should have just pulled the trigger right then.
Jim, there's an interesting story developing with Clover, which is a company that was taken public via SPAC with one of the favorites of WSB, which is Chamath Palihapitiya. They had a report published by Hindenburg Research, which does insist that it has no position. But I want to look at this from an overall standpoint. Does this show that the narrative shift that we saw last week with shorts kind of being chased out of names such as GameStop, showing that that's more short term, or is this just Wall Street continuing business as usual?
No, I think that this is I'm holding a piece of Clover Health, how the king of SPACs lured, L-U-R-E-D, retail investors into a broken business facing an active undisclosed DOJ investigation. I mean, this is a piece by Nate Anderson. He was instrumental in explaining to people how Nikola was not a good situation. That really does raise eyebrows. It looks like there's many issues involved in Clover, and that the promotion machine, the Wall Street promotion machine that is Chapatia may be at a crossroads here. I'm not familiar with the man. I do know he'd walk a mile for a camera. But anyway, good report by Nate, and I think it bears reading.
Agreed there, Jim. So also on Twitter this morning, Elon Musk tweeted about Dogecoin and said that it is, and I quote, the people's crypto. So I want to approach this from an educational angle. How can investors vet these various cryptos and decide which one is best for them? Or are you really only watching Bitcoin?
I'm Bitcoin. I own Bitcoin. I bought Bitcoin not for speculation whatsoever, but as a way to be able to, I can't own stocks, although I have action alerts from Charitable Trust. To be able to diversify, I've always said that gold is something you should own. I think you should own stocks. I do mutual funds. Some cash. As I get older, I have more cash. But I also felt that it's time to diversify into a great storehold of wealth, which is Bitcoin. I'm glad I did it. I didn't expect to make any money, and I just wanted to be in something that if we have an incredible, say, hyperinflation, or we have an era where no one trusts fiat government money, which is kind of where we are. It would be just a good diversification method. I remain committed to Bitcoin. I remain in Bitcoin. I think that Bitcoin is very important for everyone to consider. Do I know the particular aspects of what Musk is talking about? I know my stuff, and I feel very good that Bitcoin is part of
vehicles. Really affirm your bullish viewpoint on this sector.
Yeah, very much so. My friend Phil LeBeau broke a terrific story there about Hyundai and Apple getting together. And he did talk about Hyundai having good quality, because all I care about with Apple is the customer satisfaction level is so high. Auto is the largest total addressable market out there. There's so much exciting stuff happening here. I mean, whether it be what Apple's up to, or what Alphabet's up to, what Facebook's up to, what Microsoft's up to, obviously what Tesla's up to. But we always got to keep the eye on the prize, that Apple needs to be more than just a cell phone company. It continues to do so. Tim Cook, own it, don't trade it.
All right, and then let's talk about Nokia, another earnings report that we got, which is also one of WSB favorites. They reported earnings and said that they expect 2021 to be a challenging year. Now, we know that one of the unique reasons that some of these newer investors like the stock is that they believe that it's a good play for a couple of reasons, which includes 5G. But does this earnings report really support that belief, or am I thinking too homework-based?
No, Nokia's just Nokia. I mean, people want me to recommend a $5 stock, $4 stock, and Look, Samsung's the winner here. We don't trade Samsung. There was someone, a critic on Twitter saying, "Well, Jim, once again, you got Nokia wrong or something." It was like, like I told people to sell Nokia like 100. I mean, sometimes you can't be more right. And when you hear that you're wrong about something, you just say to yourself, "Geez, I wish that person would do a little more homework about my homework." Because I think that what you would find is that I've been spot on about Nokia the whole way down. Now I'll double down here by also saying Ericsson.
All right, Jim. And before we go to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com, I do want to talk to you about your real money column this morning because I found it fascinating. And I found it fascinating for a couple of reasons, but you're focused specifically on informative speculation and what that looks like. You point out that one of your points is to find, and I quote, an idea, a theme that is really big, and taking it for a ride, a long one, and getting some phenomenal gains. Now, this does sound familiar to some conversations that I've had in the past 2 weeks, and with such believers in GME, Nokia, and BlackBerry, Jim, I'm wondering how investors themselves, especially newer ones, can find these themes.
Well, look, I think you got to start with where's the world? What do you care about the world? Do you care about the idea of preserving the planet? If you do, well, that's one of the reasons why Tesla was so successful. So it's one of the reasons why I focus on hydrogen fuel cells. Now, hydrogen is not economic right now, but it could become economic. Plug Power has been the company that's behind that. And that column in Real Money was really addressed to the people who say, you know what, I want to get behind a concept that's not a short squeeze, a concept that's not about taking a broken company and making money with a stock. I want to get behind someone who's got an original idea, who sees the future, and that is Andy Marsh at Plug Power. So I urge people to read the story. I think it'll really put in perspective what they need to know before they do speculation. And I do like speculation. I think speculation, when it's informed, is terrific augmentation, like owning mad money stocks. And I think the piece does put things into in a framework that it really is very accessible.
I do agree with that, Jim. I thought that you did a really good job of laying out Tesla and Plug Power, not against each other, but as the respective parts that they play in this larger theme. So I do appreciate the way that you broke that down. And of course, if you haven't read it yet, you can go over to realmoney.com. With that, Jim, let's head on over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. Guys, come join us over there. I'm Catherine Ross, and we'll see you tomorrow.